Our conversations continue here in Davos. Joining me now for an outlook on the energy markets, which everyone is focused on, is the man who has the forecast for the energy markets. Fatih Birol of the IEA joins us. Mr. Birol, always a pleasure. Thank you so much for joining us on CNBC-TV18 for our annual catch-up here in Davos. So let me start by asking you about what the future holds for 2024 as far as the energy markets are concerned.
So I think when I look at the energy markets and how it develops, I think there is a good news for countries like India, energy importing countries. When I look at the oil markets, which is key for India's import bills and most of the developing nations, I expect that except there is a major escalation in Middle East, rather comfortable oil markets, because there's a huge amount of new oil production is coming from Americas, United States, Canada, Brazil, Guyana, and this growth is higher than the expected oil demand growth. So this alone will compensate the oil demand growth and provide a comfortable basis, and I would expect that we may see a reasonable price range for 2024.
What could that reasonable price range be?
About the levels that we have, and we may even see if the economic growth is, especially in China, weaker than what people already estimate. We can see even further downward pressure on the prices. When it comes to natural gas and LNG markets, I think the good news here is that starting from 2025, a big wave of new LNG capacities coming to the markets, especially for United States and Qatar, and this would mean that until recently, the markets, the LNG markets, gas markets, were the markets of sellers, and now it will turn to the market of buyers. Okay. So it will make the hands of the buyers stronger. So both oil and gas markets bearing some major geopolitical escalations, we may see a rather reasonable price ranges, which is good for the economies of developing countries that import energy.
Absolutely, and that's great news for a market like India. But let's talk about the big silver lining through 2023, and that was the addition as far as renewable capacity is concerned, and that's something that you continue to be very confident about.
Yes, renewables are really a star. Next year, according to our data, last year, 2023, renewable additions increased by a factor of 50%, about half, and more than 500 gigawatts, especially solar, but also wind. China, India, Brazil played a critical role, and in the entire world, in 2023, of all power plants built, 85% were renewables. Close to 5% nuclear power, and only the rest are fossil fuels. A big change, and decarbonization of the power sector is very much on its way.
Well, that's good to hear, but specifically as far as India is concerned, because as you said, China, India, Brazil driving the renewable capacity addition. The thoughts on India as you look at both the renewable roadmap as well as the move towards green hydrogen, EV adoption, etc.
Now, India is, in terms of energy, making incredible good steps, ranging from pushing the biofuels, bioenergy, to the big program on Ujvala, bringing LPG and other solutions to the people in the villages, in the rural area. The lighting, LED lighting, efficient lighting, and also renewables. Solar is a big growth. I think the next chapter, the two next chapters for India in terms of its clean energy transitions, I would say, first, electrification of transportation system, electric cars, both cars and the charging stations. This is one, and the second one is a bit later the green hydrogen, because when I look at the huge renewable potential in India, green hydrogen may well be a lucrative business. So these are the two next chapters I would see in the context of India's clean energy transition.
Well, those two next chapters for India we're going to be watching very closely. But you talked about electric cars. Let me ask you if you are concerned about what we're seeing happen globally. The appetite for electric mobility seems to have hit a plateau at this point in time because of the unequal distribution as far as charging infrastructure is concerned, higher interest rates, affordability of product. Does that concern you? Are we seeing a pullback because governments are also reviewing their plans to phase out ICE engines?
Yes, I mean there are definitely some questions here, and there are some hiccups in terms of the big journey of the electric cars. But I can tell you, 3 years ago when we talk here, 1 out of 25 cars sold in the world was electric. 1 out of 25. And last year it was 1 out of 5 cars sold as electric, and in a few years of time every second car sold will be electric. There are problems, there will be problems in terms of the infrastructure. Charging stations is one issue, in terms of the government policies. But I talked just the other day, the top car manufacturers of the world, 20 top car manufacturers of the world, their CEOs, 18 out of 20 CEOs told me that for them electric cars is the top priority when it comes to their business strategy. And it is not driven by climate change or anything, it is just a business, because it is a new technology, it is the innovation. So I think it is unstoppable, the electric cars penetration.
Okay, you believe that it will continue and could be a force to reckon with as we move forward, an even greater force to reckon with. Let me end by asking you about Russia, because when we spoke in Davos last year, you believed that the sanctions were impacting Russia, were hurting Russia. How do you see that story playing out? Because the war continues.
The war does continue, and I hope it does finish as soon as possible, because it is costing a lot of human lives, and it is really tragic in this century seeing such a drama. But when it comes to energy, I mean, last year, 2023, as a result of sanctions and the market developments, Russia's energy revenues declined by a significant 25%. And I expect with the lower energy prices, this year we expect, plus the sanctions, it will continue to decline.
Fatih Birol, always a pleasure. Many thanks for joining us here in Davos, and we look forward to seeing you in India. Thank you very much for your time.
Thank you very much. See you soon. Thank you.
See you soon. We will take a break here, but the conversations will continue. More from Davos coming up in just a bit. We're back in a moment.